Assalamu alaikum friends, how are you all? So welcome to the part 3 of financial accounting paper. Here we are going to do the extra multiple choice questions. Okay, so let us start. In part 1 and 2, part 1 I discussed from the full exam on section A questions, and part 2 I discussed section B questions, and this part 3 is also going to discuss section B questions. There are two questions with 15 marks each. So you must be familiar with how a section B question looks like in financial accounting. Okay, so let us start. And you have been given the extract of the income statement and the financial position, okay, of a limited liability company. And we have some additional information. Depreciation expense for the year was this much, and asset with a carrying amount of 1974,000 were disposed at a profit. So complete the statement of cash flow. Statement of cash flow. So basically, this is a statement of cash flow. Make sure that you know how to prepare a statement of cash flows. Okay, so the first one will be profit before tax or profit after tax. Here's profit before tax, right? You adjust profit before tax. Okay, how much is the profit before tax? It is, you will see from here, profit before tax 15,000. So you're going to write 15,000. Sorry, 15,000. Next we have depreciation. Okay, you need, so depreciation, first of all, depreciation you add or subtract. Adjustments, profit before tax you add. Okay, all non-cash items you add, because when you are taking this profit before tax you deduct a depreciation. And what are we doing in the cash flow statement? We are converting that profit to cash profit, cash flow. Okay, cash flow from operating activities. So we add the non-cash items. Depreciation has to be added back. How much? Four six five eight. Okay, 4658. Okay, they are dropping down the three zeros, so just 4658. Next, profit on disposal of non-current asset. Profit needs to be subtracted. Okay, because profit was added before when we were taking profit. Now we are converting the profit to cash flow. Okay, how much is the profit? It is 720. Here it was disposed at a profit of 720, so 720. Next, inventory. Inventory you cannot say add. Inventory payable and receivable and payable you cannot say whether add or subtract, because first you have to see what, whether it increased or decreased or what happened. Okay, so for inventory, okay, just look at the inventory from last year to this year. Inventory drop down. Inventory drop down, you have to add the difference. Okay, so it is 6075. Because when inventory decline means you don't have to pay cash to get it. You're sending up this inventory. Next, coming to your receivable. Going to your receivable back, you can see receivable increased. Receivable increase means your customer is taking longer time to pay. So you have to subtract 1863. Next we have payable. So payable also we have to compare. Payable, you can see payable, it is increasing. So payable is increasing means you are taking longer to pay your supplier, which means you are having cash. So you add how much? 3198, which needs to be add. Now the tax paid. What is the tax paid? For tax paid you need to do a working. Why? Because you have taxation here and then we have this tax. So for tax we need to do a working. What is that working for tax? What was the tax you paid initially? It is, sorry, opening tax balance 2760. Okay, from that 2760, what was the tax expense? It is this 4350. So you add both and then you deduct the closing year tax liability, which is 3020. So it will be 4090. Okay, you subtract, right? Tax you subtract, right? Next, net cash inflow from operating activities. Okay, you don't have to write it because next we are going to the investing activities. Okay, so your cash flow looks like this. It starts with operating activities. All your inventory, receivable, payable will be there, tax will be there, depreciation or any profit, any adjustments will be there, then your interest, everything. Next, investing. Investing is you are acquiring non-current assets or you're disposing whatever the cash you are receiving. So payment definitely you subtract, and proceed you add. Okay, so how much? For that also you have to do a working to get the payment and all. So how are you getting it? You start with the carrying amount. Okay, what was the carrying amount for the payment? It is 26574. From there you deduct the depreciation. Depreciation was how much? It was 4658. This was the depreciation. Okay, after you deduct depreciation, you dispose whatever you dispose, you are selling. This was the carrying amount. Okay, you minus this also because you're disposing it. Okay, and the closing balance was this much. Okay, so the balance is what you have purchased, which is the carrying amount. Okay, so what is it? It is 24340. Okay, next proceeds. Even for the proceeds you need to do the work. Okay, but the process is 2694. Okay, this is the proceed. How did we get that proceed? Okay, what is the carrying amount? The carrying amount is this 1974,000. You have to add the profit 720,000, and that's it. That's the proceed. Okay, next we have the cash flow from the financing activities. So the third part of cash flow is financing activities. Financing activities is all about your share capital, loans and all. How are you financing? Through share capital or through loans. So proceeds from issue of share capital is added and repayment of loan is subtracted. Because when you're repaying the loan, your cash is going out. Okay, so how much is your cash flow? Your share capital. Okay, to look at that you need to look at your share capital. Okay, if you see your share capital from 17,496 to 19,365, it increased. Okay, there's an increasement. Okay, so it is 1869. Next, the repayment of loans. How much is the repayment of loans? Same, just go to the loans and see. Okay, from 10,300 it reduced. Okay, so loan reduced means there has been a repayment of loan. How much? It is 2,300. Next we have net movement in cash and cash equivalent. Okay, you have to say whether it's inflow and outflow. Okay, for this it is inflow. Make sure that you do your working and you get an inflow. Next, how much? It is 181. 181. Next, the cash equivalent at the beginning of the period. What is it? The beginning of the period, the cash. It's a bank overdraft if you see, and you have a cash. Okay. So working is required because we have a cash also, we have a bank overdraft also for both. So when you adjust both, in the beginning it is 634 and in the end it will be 815. Okay, Make sure that you actually get the figure. Until you don't get the figure, don't move ahead. Keep doing it. Next. So this is the last question, and let us read the background. On 1st of Jan 2003, Gaster acquired. So this is to do with consolidation and all. When you acquire a company, okay, acquired 75% of share capital of Erica for this much, and the retained earnings has been given, and their share capital remain unchanged, and the two companies' financial position has been given. NIC is also given. And task 1, calculate the following to determine the goodwill arising on accusation. Goodwill. How to calculate goodwill on accusation. You have to know this. And mind you, these things will be coming in financial reporting as well later on, and also in your SBR. So there is no way that you can skip this out, right? Because SBR is a not an optional paper, it's a compulsory paper. So there's no way for you to skip this part. You have to be good at it and understand it at this stage, because this will be repeated in the later stage, right? So what is it? Investment in Enica held by Gester company. How much it is? Definitely you have to get out of all this option. If you are getting some answer out of this option, not in the option, that means you are wrong somewhere in the calculation. Okay. It is 1380 because it is this amount. The amount you have paid, that is the investment. And here, after that, that is like your purchase consideration. Okay. With that, you are adding the NCI as that accusation. NCI you are adding. We add NCI. Okay. This is a fixed format. Okay. What is the NCI? 450,000. So 450. Okay. Here they have given you NCI. Next, total value of investment and accusation at A is how much? 1830. Next, equity share capital. What is the equity share capital? It is 1000 because Erica's. Okay. Next, after equity share capital, what is the next item? Retained earnings. Retained earnings. And how much is the retained earnings? It is 480. How 480? Because they told the retained earnings at accusation at this one was 480,000. Okay, so it will be 480. Next, the total fair value of Erica's net assets at accusation. This you have to type. It will be 1480. Goodwill at accusation expressed as a formula. As a formula now. Okay. So it is. You are taking always 100%. Okay, no 75%. So definitely it will be this one or this one. Okay. Out of this two. So A minus 100% of B. Okay. It is A minus percentage minus 100% of B. That means A is this, B is this. Okay, so 100% of this, that means total fully 1480 will be minus from this A 1830. Okay, that is the goodwill. I'm going to close down task 1 and open the task 2. So now, are each of the following statements related to consolidation correct? Goodwill is recalculated using the most recent fair values at each reporting year end. Is it? No. Why? Why? Why it's a no? Because the process of consolidation results in a single legal entity. Okay. Next, NCI will always feature within consolidated financial statements. Is it? No. Why? Goodwill is calculated at the date of acquisition. Sorry, I'm sorry. I just messed it up. Goodwill is recalculated using the most fair value at the reporting, and the reason is because goodwill is calculated at the date of acquisition. Okay, we don't update goodwill according to the fair value changes. It is at acquisition we calculate the goodwill, and in NCI, it will not be recorded always within the consolidated financial statements. Why? Because the process of consolidation results in a single entity. The process of consolidation results in a single, separate, legal entity. No. Consolidation is like an accounting requirement, okay, which represents group as a separate legal entity. But parent and subsidiary, they are separate legal entities. Okay, and next one. If a subsidiary, okay, here NCI will not come always. Why? Because if subsidiary is 100% owned, there will be no NCI, right? NCI only comes when it is less than 100%. So now let us start with task 3. Okay, select the formula which correctly calculates NCI as a 31st December in accordance with IFRS 10. Okay, so it is the fair value of NCI at acquisition plus the 25% of post acquisition profits. Now task 4. Okay. Calculate the following figures which will be reported in the statement of financial position. So investment. What is the investment? It is 0. Gestas, consolidated financial statements. Okay, Gestas, the parent company. Okay, why? Because the investment is eliminated on consolidation. Look at the investment. They have investments, right? This or this, it will be eliminated on consolidation. Next, other assets. Okay, how much will be the other assets? It will be 6,900. How? Just add this. So it will be 6,900. Next, we have the share capital. How much will be the share capital? Share capital will only be 2,000. Don't go and add 1,000. Okay, we don't add the subsidiary company shareholders. When it comes to share capital, always the parent company. 100% of parent company. Does not matter how many percentages you have issued. Okay, so it's 2,000. Return earnings. Return earnings will be how much? And return earnings working is required. Okay. So before we go to return earnings and NCI, let us do the liability part. Liability is also just the addition of those two, 1840 and 740. So it will be 2580. Okay, and retain earnings. How much? So let us go to the retain earnings. You can see it is 2040 plus 75% of 660 minus 480, because this 660 and this 480 post acquisition. Okay, you are taking the post acquisition 660 minus 480, on that 75% you add with this, so that will be your return earnings. How much? It will be 2175. Next we have NCI, non-controlling interest. So non-controlling interest will be how much? 495. How? NCI at acquisition was how much? If you see, it is given as 450,000. This plus the post acquisition return earnings. So share, what is their share? 25%. 25% of post acquisition earnings. Same. Okay, post acquisition earning is 660, this minus 480. Okay, so 495. So with this, it's over. Okay, so with this we have finished all the first 3 papers, F1, F2 and F3. How the exam looks like. It's all multiple choice questions. So it is something which should be the first step, I would say, first stage where an ACCA students who are planning to do ACCA if they want to do after finishing their 12th grade or A levels, can do. Okay, there is no such thing as which paper to do first. You can do the paper in any order, because these three are the easiest paper in ACCA. It is the first step. There are many stages. This is the first stage. The first three is the first step. After you clear this first three paper comes the next step, that is known as your applied skills paper, from F4 to F9. Okay, so from here onwards, the next I will be focusing on those paper, applied skills paper. I'll be doing questions on CBE platform for tax, taxation, audit, uh, not the advanced level, the F levels. Okay, then we have financial reporting, we have the performance management, then we have the corporate reporting. So no, sorry, the law and financial management. Financial management I've recently done. I have done financial management, so I'm not going to do it again. You can check out the videos on financial management. F9 I've done, the other papers I have to do. So, and after that, when we are coming to the P levels, the advanced level, I have done the AFM in depth. So the other papers I will be doing, like SBL, SBR, or ATX, as I promised. So that's it, and don't forget to subscribe to my channel and share this with your friends who is in a confusion or who wants to know more about ACCA. Do share this with those friends who wants to know how an ACCA is and what does it look like, what are the questions you can expect and all. Maybe they'll be familiar with most of them, or maybe few of the questions from their earlier studies, so it will help them. And if they are not, then this is a good chance to know without even purchasing your first textbook or without actually even committing yourself to ACCA. They can have a go through and see, decide for themselves whether they want to or not. So guys, I'll leave you here and see you in the next video. Take care.